Hi guys and welcome to the trading show. This week we are gonna talk about
markets, sky-high volatility, our portfolio, tough week, tip of the week, intraweek bias on the gasoline future, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Week characterized by high volatility on the financial markets, mainly for two reasons. On the one hand, the upcoming American elections, on the other hand, the concerns due to the worsening of the pandemic, and to pay for it were the stock indices, which show very negative returns. To be honest, there aren't great positive returns over the course of the week. We see almost solely red marks. In particular, European exchanges suffer more than American ones. We have slightly positive returns for bonds, but negative are energy and metals, except natural gas. Meat are positive, while soft commodities, cereals and even currencies are negative, with the only exception for Bitcoin, which came out of the trading range in which it was and broke all the highs. So, in my opinion, the most characterizing aspect for this week is the increase in volatility. We see it on stock indices. It is at high percentile levels. Volatility is also increasing a little bit in non-financial sectors, regarding both the long-term and the short-term trend. We are now talking about historical volatility, but if we take a look at implied volatility, the situation is even worse. In fact, we have the VIX index over 40 and all the volatility index on SPX are in backwardation. And as such strong backwardation hasn't been seen since March. Due to this inversion from contango to backwardation, we see now the same picture of the term structure of VIX futures that, I remind you, was already in backwardation from months. You can see it here. We are in full backwardation, and this means that we have to trade carefully because we have high volatility in front of us, at least until a certain outcome of the American elections. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome back to this new appointment with the analysis of our portfolio. This week I want to show you a system on the gold futures that managed to reach a good profit on Wednesday with the short. And fortunately this strategy managed to reach new equity highs. I want to emphasize that this system was developed in 2016, and from that date the system was never changed in any of his parameters. So we can see also from the annual period analysis that all the 3 years in the backtest were good. 2018 was just a portion, so we must not consider it. But we can see that 2019 was a good year with a profit of around $8,000, while 2020 was a surely better year with a profit of $20,000. I want to show you that in 2019 the number of trades were 111, So the average trade was around, we can say $80, while in 2020 was the triple, so was around $300, and not because, of course, the system itself, but thanks to the volatility produced by the market in this particular year. Okay guys, now we can move to the next system. This system is a reversal strategy that enters on fade breakout on the highs and lows of the day before and closes the position at the end of the day. And we can see it here. Yesterday the strategy entered long on this level, the low of the previous day, and the market started to go against us until reaching the stop loss. After a little bit the market has rebounded until the entry price over the entry price of the strategy. So we can say that the system was unfortunate, and for this reason someone could think to change the stop loss value. But in my opinion it's better to keep the backtesting inputs that you have set during the backtest, because we may assume that you have used common sense, and also we did for this strategy. So we didn't change never the stop loss and any other inputs of this system. From 2017, that is the date that we developed this particular system, and from that date all the inputs and parameters of the strategy was never modified. So we advise to keep your inputs unchanged, also if some trades are unlucky in a certain way, like this one on the natural gas. And despite this unfortunate trade, we can see from the report that the strategy performed really well during the last year. In particular, here we have charged data from January 2020, but of course with some difficult moments. Okay, now we can move to see the Titan, which is the software that we use to filter our strategies. And we can set the starting date from 1st January 2020 until today, with a starting capital of $50,000 on the sector of on the energy sector, which is composed by the crude oil future, heating oil, RBOB gasoline, and also the natural gas, which is decorrelated from the previous three, but it is still part of this particular sector. And we can see from the report of the strategy that this system performed really well in 2020, with a maximum historical drawdown of around $8,500 and a profit of over $34,000. So we can see that $34,000 on a starting capital of $50,000 are over 70% performance. Also looking at the equity curve, we can see that the strategy performed really well during 2020, despite the previous years 2019 and also 2018 and 2017 were a little bit unlucky because the volatility was very low, while in 2020 with the pandemic volatility increased on this market, and fortunately our systems managed to reach good profits.
Hi everyone, and welcome from Andrea Unger. Today we will see the main characteristics of the RBOB gasoline futures. So the RBOB gasoline futures is listed on the NYMEX exchange. There is a branch of the CME group that is located in Chicago. And it's a quite expensive future because it has a very high monetary volatility. So it's a product, in my opinion, that is reserved to expert traders and extremely capitalized traders. This is because usually it requires to use very huge stop loss, and so it's not recommended for who is started trading and doesn't want to risk a lot of money per trade. But in general, the big point value of this future is equal to $42,000, and in fact the contract unit is 42,000 gallons with a quotation to the US dollars. And the minimum price fluctuation is 1/10,000, and this is equivalent to $4.20 per tick. And the session goes from starts on Sunday at 6 p.m. New York time and ends on Friday at 5 p.m. New York time. And every day there is a 60-minute break from 5 p.m. to 6 p.m. New York time. Going to the volumes, in general they are not really high, and you have to pay an extreme attention to the night hours. In fact, the gasoline is not so liquid during the night hours, so if you have a strategy that enters short during the night hours, you may face an incredibly high slippage phenomenon. And going to a tip to a possible approach to this product, here there is a chart where is shown the average weekly movement. I realized this chart using MATLAB a few years ago. And in particular, when I saw this chart, I tried from the beginning to exploit this phenomenon. And in particular, it consists in trying to go short at the beginning of the trading week. So from the Sunday's opening here to Monday or Friday, about here. And finally, there is another interesting movement. So I think this long movement at the end of the trading week. But there are some other interesting movements, such this long possible trade on Thursday and on Wednesday here. Then I tried to code a script with multi-charts to try to see what would happen trading short on the opening of the week and try to go long at the end of the trading week. So I realized very few lines of codes, and this is the result I got. And as you can see here, the equity shape is extremely nice for being a very simple strategy. And the important thing in this case is that the equity is good both on the long side, as you can see here, moreover in the last part, because it seems really nice in the last part too, and also on the short side. And as you can see here it's a more steeped equity, and at the end of this period is not so nice, but because of the long side is quite good in this period, it's acceptable not to see a so strong short in the very last period of the equity curve. And as we said previously, the equity shape in general is extremely nice, and it's a good base to work on. And going here to the average trade, I think the long movement is extremely interesting, and this is because the average trade is quite good, but not as good as the short one. But the important thing to remember is that the long side is realized in very few bars. In fact, here the average number of bars in trades for the long side is 16, and this is equal to very few hours. In fact, here we are working on a 15 minutes chart. So saying that the average number of bars in trades is equal to 16, it means that the long side usually stays in the market for about 4 hours. And having this very good average trade in very few bars, it's extremely nice. So I hope this tip was useful. As always, this is a a base for developing your some own trading strategies. So always remember to develop more in the details what I suggest or what I present you, because they are not final strategies.
Let's take a look at the next rollovers. Next week there is no contract expiring, while the following one there will be the settlement date of the soybean. Actually, the liquidity is already on the January contract, so for those who have not yet done, the rollover has to be carried out. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.